Good afternoon, everyone, and thank you very much for joining me. This is the FXCM NFP Live Trade. My name is Russell Shulman, Senior Market Specialist at FXCM, and my email address rshaw@fxcm.com. Today being Friday, and it's the 4th of Feb. I'm just going to bring up our high-risk investment warning and then our commentary disclaimer. And I'll just then give a quick idea of the strategy and see if it pays off. We'll see if it pays off, and we'll apply our goals to the strategy. How would we measure if we are successful or not? Here's our market commentaries disclaimer. Good afternoon, Ray, and how are you, Ray? I hope everything is well, and it's terrific to have you back on the webinars. And thank you, everyone, for joining. All right, here's our references. Forex Factory over here, Trading View. So Forex Factory, you can see this is where we'll get the data. I've got a Twitter feed as well, just to see if I can get it a little earlier. But the timing of the release is not really going to be too important for the way we're going to approach this. I've got the US dollar here on Trading View. The reason that I've got Trading View open is because we are trading on a live account. This is my live FXCM account. As an FXCM employee, I actually don't get access to the FXCM US dollar. It's just it's part of the compliance. But this is a terrific index, and I want to just perhaps refer to it if I need to. What we'll be doing is we'll be trading the Euro US dollar, and I just want to put in our measurements for how we're going to measure this trade, because we have 3 minutes. Okay, so let's just bring in this Microsoft Paint. We're going to look either to go long or short. We don't have a preference. Okay, we're going to trade long or short, but we want the first impulse move. That's why the timing of the announcement is not terribly important. We want the first impulse. Either the first impulse is going to be up or it's going to be down. Then we're going to wait for a correction. So either the correction is going to be to the downside for an upwards impulse, or it's going to be ready for a downwards impulse. Once we get that the sense that there's a pullback, this is where we're going to try and participate. In terms of our goals, we're going to have a take profit of 20 pips. So we're going for 20 pips, but at the same time, we can have a stop loss in of 20 pips. So it's a 1-for-1 reward to risk. But then what we're going to try and do is we're going to try and trail the stop if we can. So if we can get stopped out for less than 20 pips, that would be counted as a success. So these are our goals. I will show you. We're going to try to time our entry here using what we call reference candle reversals, and I'll talk about that as we trade. And let's just bring up the. Okay, so let me just show you what I have here. We've got 2 minutes. We're going to be trading on the 1 minute, which is this guy on the right. I do have a 15-minute, which I may refer to, and there's a 1 hourly here, which I may refer to. This is a live trade on a live account, so the position's going to be small, just to be transparent there. Nevertheless, it is win or loss. It's going to come off or into my trading account. All right, let's just see how we've got 25 seconds gone. All right, so in 30 seconds we're going to get the NFP. So we'll just take a look here. Non-farm employment change forecast at 110. Is that right? It's low. I read it as 166 earlier in the week. Keep an eye also on the average hourly earnings. Okay, we want to see if there's wage inflation. All right, let's go back to the charts. It's going to pop now. There we go. All right. So there's the pop. All right, let's go down to, I've gone down to the minute. So the initial, I think the initial is a beat somewhere because euro got hammered there. Money went into the US dollar. We'll get the numbers in a moment. Just keep an eye on this. I think this is a terrific indicator here. It's a countdown. So we've definitely got a beat here. Yeah, we've definitely got a beat here. Let's see if we can see it. All right. Okay, forget about the Canadian figures. We're not trading loonie. All right, so this is a big beat to the upside. See that? Forecast at 110, coming in at 467. That's a huge beat, and that's hugely dollar positive. I'll explain why in a moment. Unemployment rate for me is the least important. I'll explain that in a moment as well. Let's just get the and this wage effect. All right, so we effectively have got a very strong dollar reading here. The unemployment rate here this is a lag. Okay, this is a lag. This is happening right now. So we're going to forget about the unemployment rate. We're going to just focus on NFP and average hourly earnings, which shows inflation and a strong jobs market. Let's go through to the 1 minute. So here's the pop, right? Here's the what we're talking about, the impulse move. Okay, there's that 1-2. And now we're looking for some sort of reversal, and then we want to try and catch the reversal to the downside. Now I don't know if that's going to work out or not. Nobody knows if it's going to work out or not ahead of a trade. That's why we're always going to have a stop loss in. We're always going to have a risk management strategy. In this case, the stop loss is going to be 20 pips, take profit will be 20 pips too. All right, let's just keep an eye on the current price action, see if we can get in now. I told you I'm looking for something called a reference candle reversal. I want to explain that to anybody that's new to our webinars. Hey Howard, no worries, good to have you on the webinar as always, and welcome as always. So the reference candle reversal is effectively a pattern that looks like this. Okay? So we've got 3 points here. We've got a candle that's going to have the highest high, and then that's condition 1. We're looking for price to take out the reference candle's low. That's condition 2, and then condition 3 is price actually closing below the reference candle's low. If we've got those 3 conditions, that's when we're going to look to enter. So the obvious question is, well, where's our reference candle? And it's difficult to find one at the moment. Let's just see. And the reason it's so difficult to find one, I think, is because there is pressure now on the euro. I think the dollar has a tailwind, so this can't be. See, this can't be the reference candle because to the left of it's got a higher high. All right, so we've got to try and find some sort of pullback that we can get in here, and then see if there's a good risk-adjusted entry. Let's move these here. There is a heck of a lot of pressure on the euro now. Those were really strong. Those were really strong dollar numbers that came out. Hey Derek, yeah, I hear you and feel your pain. Derek's just saying the audio is not great. Can you guys hear me okay? Can I just do an audio check there? Okay, good. All right, so I think this is heading down. I'm reluctant to put on the trade just yet because I don't want to deviate from the plan. Okay, so if anybody is short, I'm of the opinion that's probably the side we want to be on. But I want to get a good risk-adjusted entry, and that's on the pullback. All right, so let's just see if we can get some sort of reference candle. And if we can get the reference candle, we can start looking to enter. Keep an eye on the countdown here. So in another 20 seconds, we're going to get the next bar. I don't know if you guys can hear the thunder coming through. Yeah, we've got a cracking thunderstorm going at the moment. So, all right, this is a potential reference candle here because it's higher than this guy. All right, so we've got a potential pullback here that we want to monitor. Okay, 30 seconds, we're going to get the next candle. Okay. Look at this stochastic. The stochastic is my favorite momentum indicator, and it's right at that 20 level, pushing down. So there's a lot of downwards momentum there. Okay, 4 seconds, we'll get the next candle. All right, let's just do a measurement here. What we want is a reference candle. Okay, so it must be, remember the requirements, a lower high to the left, a lower high to the right. That's condition 1. So far, we're good. If price takes out this green horizontal here, then this becomes the next potential reference candle, and we're actually stalking the market down. Okay, we've got 20 seconds here. All right, so there we go. You can see now how it's keeping us out of trouble. Unfortunately, this is no longer the reference. This becomes the reference. So we carry on stalking the market. We're looking for that risk-adjusted entry. Okay. Another 50 seconds, and hopefully this is the reference candle. And you can see the stochastics just picking up a little bit there. I want it to stay 20 and below. Yeah, Pete's just making doubly sure that we stick to the method, and that's exactly right. So we're just waiting for that pivot point. So here is condition 1. We've got condition 2 now. The question is, do we get condition 3? Condition 3, it must close below this green horizontal. We get that, we're going to go short. Okay, and then we'll go short with the 20 pip stop loss, 20 pip take profit, and then we're going to try and trail that stop loss down. So we've got 20 seconds left here. Let's see if the market cooperates. All right, so we've just gone short. Here's our stop loss at 20. So if I take this should be about 20 pips. Yeah. And that's our take profits, should be at 20 pips. Yeah. And because we sort of looking at a 1 minute chart, totally between the bid and ask is good. You buy at ask, you sell at bid, right? So we just shorted. Okay, we shorted at the bid, but we're going to buy back. We're going to buy back at the ask. So let's just click on the ask because it takes the spread into account, so we can see exactly when we're profitable. So take a look. If I click on bid, it just moves slightly. I'm going to go back to ask. All right, now the next task for us is to get the stop loss down. So let's just keep an eye on our price action, see if we can do that. Okay, so 10 seconds, a little bit of support here. This is it's battling to move down, so we just got a bit of support in here just to keep an eye on it. Okay, if this support now turned resistance holds, I'm going to start putting the stop loss down. Okay, so let's just see if it. Like that. All right, so you can see that here the support's still holding. Okay, we've got another 18 seconds. We'll get the next candle. All right, let's carry on with our mapping of the peaks and troughs. Now, this has become the next potential reference candle over here. And this would be the line in the sand. "18 seconds. Can you guys hear the thunder behind me? Bit of interest. I hope it's not interfering with the audio. Ray says you can hear it. All right, I apologize. It's not how it is in the Midlands. He's saying he has rain down there as well. Okay. All right, so it's starting to cooperate. So we're gonna start moving the stock down. Here's our line in the sand. We've got 29 seconds here. We need the bears to do a little bit more. See this support area over here. This is proving our bugbear at the moment. Okay. Okay, we can't move the stop just yet because this guy hasn't been broken. So we've got the pivot, or we've got the reference here, you see it? Now we're waiting for the reference, now we're waiting for conditions 2, 3. So we're right at the support. Look, it's really the market's just trying to defend this level. The Euro US dollar bull's trying to defend this 26 level, or let's call it the 25 level. Okay, we've got 6 seconds. Let's see if we can break below here. We're right on the cusp. We can just hold steady for the time being. So a little bit of a battle going on here. You see the candles red, blue. So let's see who takes this one. Pete says he thought I was in the Ukraine. All right. We're almost there, almost breaking this. You can see it's the support level here. This is the 25. Is that right? Yeah, it's the 25 level. There we go. Okay, so it dipped slightly, and then the bulls decided this is a good time to come back in. Let's see if the bears are going to exert some pressure. So we've got conditions 1 and 2 using this as the reference. Okay, we don't have condition 3. I hope that makes sense, guys. If it doesn't, just let me know. Another 18 seconds here, so it's a bit of a slow burn now, just moving sideways. We just need the volatility to pick up. We're going to jump now to this point, and we're going to see if we can get some reference candles here. So let's get rid of this guy. What have we got here? 31.3, and this one is 31.2. Okay, so this would technically still be, wait a sec. 31.2. Here's the reference. Yeah. So it was quite an exciting start, but you can see we've now started drifting. Just need to be a bit patient here, and hopefully it works out in our favor. Okay, 10 seconds. We're still waiting for that 3-point reference. So this actually might have counted as one. Let's just watch this. All right, here's the bears building up a bit of pressure. We've got 26 seconds. Let's just see if they've got the fortitude to take price down. And then again, I want to stress, we want to get this stop loss down as soon as we get those 3 conditions charted. Still, yeah, if I'm a bit silent, my apologies. I'm just trying to just get a feel for what's going on here because it's just sideways at the moment. Getting a bit nervous here. I'll tell you what I'm seeing. I think I'm going to just keep an eye on this 1, 2, 2, 3. In other words, we're getting a different sort of a bullish kind of kick up here on the references. So we just want to watch that very carefully. I'd really enjoy it if we just broke below this line here. It would do a lot for my position. Let's just double check. 33.38. What have we got here? Okay, we're still good. Okay, keep an eye on the stochastic. Stochastic's starting to roll as well. Okay, this is it's my favorite momentum indicator. It really works when you get into the extremes. So if it crosses and hits 20, that would be a favorable move for us. If it carries on moving towards 80, well then we're going to be stopped out. This sideways movement's incredible. There's a bit of bearish pressure. Let's just see if they can accelerate that. Just push a little harder. So this 25 is really kind of what's being defended, this 1425. We've got 16. Let's see if we break below this. We're going to start putting this down. So we beat the low here by 1 pip. So I'm starting to pull this down now. So we're starting to pull some risk out. So we've moved it from 20 pips to around about 11 pips in terms of risk. So we've got 10 pips of risk out. Sorry guys, it's just a very slow burn. Let's just be patient here. Typically, you guys know Bollinger Band theory. It's as soon as that volatility narrows, we're waiting for something. I'm just worried it might be to the upside. Let's just keep on looking. Okay, so we've got another potential reference here. So getting pretty close to the top of the hour, so a little bit more volatility coming in. Yeah, and then Pete's just saying that he's looking at the US Japanese yen, also run out of steam. Got 8 seconds here. All right, 3 seconds, and then it's the top of the hour. So now, let's see what happens. Okay, so here's our next reference. Another 20 seconds here, just to see if we can get a push. I'll pull the stock down a bit more. Quite yet, not quite yet. We haven't got condition 3 yet. Okay, let's just be patient. Pete saying it's DAX, it's been a good day. Kumbulani saying he's watching the pound, US dollar. He sees volatility also contracting there. Right, we'll just let this one run for a few more minutes. Yeah. See if the bears can start exerting some of their muscle. Okay, we're going to drop this down quite a lot now. So we've pulled this down because this is an obvious reference candle reversal here. So I've pulled it down quite a bit. Remember, we started off with 20 pips of risk. We've now got that down to just about 7 pips of risk. So on that front, we're doing well. Let's just see if we can get to that take profit now. And we need this guy to stop moving down. Okay. Well, unfortunately, it just wasn't getting that traction that we wanted. The good thing is we've dropped the risk from 20 pips. You can see we've got out for 6.9. So what we'll do is we'll say in terms of risk performance, yeah, that was fine. It's just a pity we didn't get our take profit. It was really just that last few minutes moving sideways was a hard grind, and then you started getting these higher troughs, higher peaks. So that's very interesting. Guys, I hope you enjoyed that. Unfortunately, take profit wasn't hit. We'll do it all again in a month's time. Please look forward for the email. Thanks very much and have a terrific weekend. Cheers, guys.